Welcome back, everyone. Today is Monday, August 20th, 2018. Today's going to be a little bit shorter of a video, but I'm really excited to do it. There's going to be two pieces that I'm going to talk about. So I guess I'll just, I'm not going to spend too much time. It's Monday. Excited to get back into things after, don't make videos on the weekend or haven't been. So it's nice coming back on Monday with some energy and some excitement for the space. Again, good tip for everyone out there. Nothing wrong with taking a day or two off. It's actually really helpful coming back and looking at everything, reading into everything. Giving a day or two off really gives some refreshing energy. At least for me, I really do enjoy it. So the first thing I want to look at, this is the less interesting thing. The thing I'm going to end on, the second thing is actually, to me, something I'm excited to talk about. And it's in regards to the chart. It's in regards to the prices. It's in regards to potentially how low we'll go. And yeah, before we get into the video, if you're new to the channel, please consider subscribing. But the first thing here, so I have this on CoinMarketCap. This is just the global market cap dating back to May of 2013. So basically a little over 5 years here, and I have it on logarithmic scale. And for people that are new to it, logarithmic basically just puts things more into perspective of percentage gains. It doesn't skew the data as much. And for example, we can put it on linear. You can see there was quite a bit of action that went on prior to 2017, but on a linear scale, it doesn't look like much happened. You can see the line here is basically flatlined, right? And so the reason people use logarithmic is to kind of get to kind of unskew that data, so you can kind of see the percentage jumps and what the market really did. So these are the same time periods here, but this one's on linear. You can see if you're looking at this, basically you would think nothing happened until May of 2017. But if you look on logarithmic, there obviously were some nice percentage gains. I mean, for example, the market went from a little over $1 billion to all the way up to 15 billion essentially, which is huge in terms of percentage gains. But you wouldn't see that on a linear scale like you do see on the logarithmic scale. So the first thing I want to point out too, this is kind of the perspective this is kind of the thing people look at, right? You see the global market cap right around the end of 2013, which started that bear market that everyone references, including myself. And I really didn't get out of it till I believe it was around like middle of 2016. Yeah, so it was about 2.5 years, right? From pretty much the beginning of 2014 to the middle of 2016. So 2.5 years was that bear market. And I don't think the scenario we're in now is at all similar to that. And actually that leads me kind of into the second thing I want to talk about. This is the Bitcoin chart. It's on a daily chart here, and I have it super zoomed out so you can kind of get a perspective of this. So the first thing I want to look at is this. So prior to the beginning of that 2.5 year bear market in 2013, really at the end of 2013, what we do have was we had an insane rally prior to that, and then a cooling off period for about 7 to 8 months before another insane burst up. So okay, if we just take a look here, Bitcoin was less than $20, around roughly between $10 and $15, and then it had a huge spike up to 260 at least on this chart here, so well over $200. And then this was in April 2013, and then it corrected essentially until the end of 2013. So roughly October-ish, the beginning of November. So roughly 6 to 7 months. Eventually, instead, it was in these, it was in kind of a nice correction pattern for months and months, right? Over half a year. And then instead of breaking down, what it did do was blew up from about 130 after correcting from like 260-ish, all the way up to over $1,000 for the first time, right? In Bitcoin's history at the time. And then this is the bear market that ensued after that. This is where it began right here. But the reason I have this trend line here is because this kind of upward trend line kind of acts as, or at least has acted completely as support in the past. When we were up here at these highs, we were trading above the moving averages, the 50-day and the 200 moving average. And then, of course, when we get closer to the trend line here, we were trading, for the most part, below those averages. And sometimes finding support in there and everything, but obviously for the duration of the bear market, we were trading below those. And this dates all the way back to 2011, at least on my chart here. So if we zoom out, which is kind of the point of this, why I'm showing this, if we zoom out, you can see, and again, this is on a logarithmic scale as well. So it gives a better perspective of percentage gains. Otherwise, again, it would be like a flat line for the first like 7 or 8 7, 8, or 9 years of cryptocurrency, which would be kind of useless in terms of data, right? But yeah, you can see where we're at right now. We've almost pulled back completely to this trend line. We haven't quite yet. And actually, if we kind of trade sideways for another month, basically, according to this and where the trend line would be, bottom would be roughly like the very bottom would be like 5,000, because the longer the time goes on, the higher we should be in terms of a bottom, just because that's what this trend line indicates. If we are at $5,000 in 2022, there would be a problem, right? This trend line would not be intact at all if we were at $5,000 in 2022. So the reason I bring that up too is I think it's cool that potentially, at least in terms of this very long trend, again, this is on the daily, so you can kind of get every single day in there, and we're not missing out on data in weeks, or if it was on the monthly. You can see here, dating from 2011, this acted as kind of support for 1 to 2 years. Here, it didn't break that, and currently we're not even percentage-wise up nearly as much as we were back in 2013. But what's cool about this, the pattern I think is potentially cool. Obviously, you can't really predict these things, but this right here, this correction that we're in right now, could potentially be more similar to this if we would have to pick. Again, these aren't really predictable, and you can't really say, this one's exactly like this one or vice versa. But I know a lot of people are comparing what we're in now to this, but I think it would make more sense to compare it to this, if anything, just considering that we were hugging essentially this trend line for a while and then had a huge break up. Essentially, that's what we were doing back even in 2017, hugging this trend line and then broke up. So, if we're looking for repetition in patterns, it would make more sense to compare this to this, not to this. So potentially what I'm saying here is that it potentially could make sense to have a break up in the near future, and then maybe start a bear market, then maybe start a correction. Who knows? Again, this one lasted roughly 6 to 7 months. The one we're in now currently, I believe it's it's a little over 7 months, so it's kind of around the same time frames. You can even see here they're pretty similar. Obviously, the consolidation patterns are much different here, but I just thought it was something interesting to point out. Again, as long as we're above this trend line, everything's good. We've always been above this trend line, essentially, right? Even in the bear market of 2013, 2014, 2015, and we're getting close to it now. We're very close. We can zoom in a little bit. Not much room, I can make another little circle here. Let me just delete this one so you can see the other one better. So this little area right here is really the space in between where we're at right now and the bottom of this trend line, or where the pattern we're in now would meet that trend line. So yeah, let me know what you think. I just thought it was interesting to zoom out, try and get an even bigger perspective, try and get the biggest perspective as possible, especially in a bear market, to just kind of grasp for straws and see where we could be at, because it all is guessing. But at the same time, it's nice to know your perspective of where you are in the overall thing.